Greetings, participant of International Conference on Business, Economics, Law, Language, and Psychology in Dubai. On this occasion, I'm going to present my thesis with the title of The Impact of Foreign Direct Investment on Domestic Innovation Performance, the case of construction industry in 38 OECD member countries. Before I'm going to my presentation, I'm going to introduce myself in a bit. My name is Daffa Hilal Prasetyo, and I am a BSc graduate in International Business from University of Groningen in the Netherlands and also School of Business and Management in Bandung Institute of Technology in Indonesia. If you have any inquiries or any questions and feedbacks for my thesis, you can reach me out through my email and also my LinkedIn. Without further ado, I'm going to present my thesis. Now, I'm going to start to introduce my topic by giving you a fact that may be appealing to us. Did you know that in 2050, there will be 7 billion people living in the cities? Why? Because of the rapid migration that's happening across the globe in both national and international level, especially after the COVID-19, where international borders are open and international movement to major cities happening to cities such as Shanghai, New York, London, etc. This is because of the unequal spread of economic welfare, where the wealth of a nation is only centralized on the urban areas but not in rural areas. And this also explains why there are many people living in the slum nowadays, where in 2020 there are more than 1.5 billion people living in the slum. The result for this were emerging trend of housing crisis and also high property prices, where there is high demand but such low supply, and it drives the market price really up. If we take a look at the current state of productivity, well, in the construction industry over the past 20 years, the growth is just 1% annually. And if we compare it to the manufacturing, for example, it's 3.6% growth. And in the global economy overall, it's 2.8% growth. We need solutions. Why? Because it's almost impossible to meet the predicted demand in the previous slide because of the rate of the productivity. And for this, we need innovation. Why innovation? Well, because of the peer pressure that exists in this industry, where a player in the market may possess the necessary innovation to increase the level of productivity, leading to other players to imitate the same. And as a result, the overall growth in the productivity happens. And if we take a look at the equipment, the rate of innovation in this aspect has changed over the past 30 years because of the client pressure and also technological advancement in related fields. However, while it is intuitive, right, to think that with more funding or investment leads to higher innovativeness. But this is not be the case in the construction industry because there is such a limited literature explanation in regards to these topics. If I could highlight the informational gaps that exist in the literature, first, national level socioeconomic impact of innovation in the construction industry. How about the sole impact of FDI towards innovativeness itself? And also, FDI is argued to have an impact on innovation, but it is underlined by the government intervention and the notion of sustainability. Where's the FDI towards innovativeness in the construction industry solely without third parties intervention? And finally, FDI is a branch of manufacturing industry. So why not infer theoretical findings from this industry? Well, there is a mixed polarity between these two in terms of relationship between FDI and also innovativeness. In this research, I'm going to create this research under the several logics to fill these gaps. First, the firm level panel data analysis. The existing explanation of FDI towards innovativeness is lacking in terms of explanation within the firm level, and panel data will also allow the research to capture time variations. Secondly, firm level variable as a moderation instead of a country level. Firm size will appropriately applied as there is a uniform argument that bigger firms are able to attract FDI better than smaller firms, and these firms bear the cost-effective capabilities during the innovation process. And finally, I'm going to include OECD member countries as the sample countries for data availability and also generalization of results. Accordingly, this research will be constructed under these two questions. First, to what extent does an economic inward foreign direct investment affect the firm's innovation performance in construction industry, and how does the firm size may affect the relationship of inward foreign direct investment towards the firm innovation performance in the construction industries? According to the research question I mentioned in the previous slide, there are two hypotheses that I developed for this research. First, in regards to the FDI and innovation performance in construction industry. There is a positive relationship of FDI towards innovation performance through an increase in the level of competition in this industry. Businesses in China increase their productivity and compete by using innovation to stay ahead of their rivals in the market. In doing so, the first hypothesis will be there is a positive relationship between inward FDI stock towards MNC's innovation performance in the construction industry. As for the second hypothesis, in regards to the firm size as the moderation for both FDI and innovativeness, strong evidence exists that the size of the company affects investment decision, as it is alleged that smaller companies tend to discourage investors while medium to large companies able to persuade investors to invest in the company because of its profitability, possession of technology, and also a high level of productivity. In doing so, the second hypothesis will be there is a positive relationship of the moderating variable towards the main relationship of independent variable towards the dependent variable. In doing so, this is the conceptual model of this research, where the relationship between independent variable and dependent variable are positive under the first hypothesis, and for the second hypothesis, where the moderating variable have the positive relationship with the independent variable and dependent variable. I'm also going to introduce 4 national level control and 2 firm level control, such economic freedom, economic growth, tax burden, inflation, MNC's liquidity, and MNC size. Why? Because these are effectively an FDI determinants that should be taken into account and should not be taken for granted, as scholars have incorporated this dimension in the existing research, in which these aspects will be assigned as the control in this research. And now I'm going to present the data and methodology for this research. There are several sampling criteria that I applied for this research. For the company that will be studied, the company must be an active company based in OECD countries and operating in construction industry. And for the firm size, there are several possible measurements such as total assets, total sales, and market capitalization. And for this research, I will use total assets that I sample from the 170 companies that I source from the Orbis following the criteria that I mentioned. And if you guys can see on the right, there is the distribution table for the number of companies according to the membership of the OECD member countries. And in this table, I present the other variables that I use in this research, and also their description, their measurement method, and also the unit of measurements. And there's also the equation for the panel data analysis with both fixed and random effects applied. And for the period of study will be 2016 to 2020 to capture time variations before COVID-19 and also data availability. And now I'm going to present the results and discussion for the independent variable first. So inward FDI stock on construction industry have a statistically significant relationship towards this research and development expenditure, or R index. If the 1 unit increase in the FDI stock leads to 0.000155 increase in the R&D expenditure ceteris paribus. The reason for this is that there is a backward linkage industry nature in this industry. Instead of being designated exclusively for R&D expenses, the capital flow from inward foreign direct investment for innovation purposes will also allocated towards the cost of conducting partnership between MNCs and its affiliated suppliers. For the firm size or the moderating variable, the magnitude will be also small as well, which the number can be seen on the slide. And the relationship is positive, and thereby the hypothesis number 2 is confirmed. And the effect is also statistically significant and 99% confidence interval. The possible explanation for this is based on the eclectic paradigm of internationalization theory by Dunning, which said that MNCs will start internalizing their projects rather than using the linkages that they have already created as they gain market experience and asset size. At that point, MNCs will start allocating FDI source capital to in-house R&D activities, becoming less dependent on the network they have already built. And now for the results and discussion for the control variables. Among 6 control variables deployed in this research, there is only one control that is statistically significant, which is GDP per capita. The regression coefficient and the interpretation for this is that there is a statistically significant relationship between this variable towards the R&D expenditure with the magnitude of 0.001 ceteris paribus. And the possible explanations is that higher economic growth can stimulate higher innovation performance in an economy, and also GDP per capita measures the level of economic growth, which is a positive determinant towards foreign direct investment itself. Finally, I'm going to present several contributions of this research. First is towards the scientific literature. The results of this study will be an addition towards the existing published business and economics literatures that examines the performance of innovation and foreign direct investment, and to some extent towards the field of civil engineering, as the study concentrated to the construction industry. Contribution towards the government. These researches serve as an implication for the government on the importance of having an integrative role in supporting the linkages of the construction industry or other industries who rely on the partnerships with relevant entities should they opt for conducting innovative purposes. And finally, for the business practitioners, should business practitioners seek to innovate in a highly productive manner, strategic partnership needs to be done and conducted internally by the time they have enough assets. In doing so, the availability of supporting industry should be another consideration for business practitioners in FDI decision. Now, this research is not complete without mentioning several limitations and also its recommendation. First is that there is a missing values in the independent variable and the control variable. The missing observation will be replaced with other values in other year as this regression is unbalanced. However, scoping towards a period of studies with no missing values by itself would increase the reliability and credibility of this research. Secondly is that there are some but not all OECD member countries presented in this research. Due to the sensitivity of the data, some companies do not disclose their R&D expenditures in Orbis, leaving only 170 companies that are coming from several OECD countries. The appropriate recommendation is to replace two other variables that measures innovation and performance but with lesser sensitivity. Finally, this might be a direct recommendation is to incorporate corporate strategy partnership dimension in the research of industry with high backward linkages. Similarly, a comparative study could be generated where this investigate the impact of FDI towards innovative performance with and without the presence of partnership in a country in terms of the coefficient sign and magnitude. If I could conclude this whole presentation into one slide, there are 3 main takeaways that I could create. The first one is that there is a positive impact of FDI towards the innovation performance in the construction industry. However, the magnitude is small as the invested capital are allocated towards the cost of conducting partnerships between MNCs and its relevant suppliers. Once the firm size increase, such as by increasing their assets, they will internalize their activities where instead of relying on network of partnerships, they will now do everything in-house. This is an explanation for the positive relationship of the moderating variable towards the relationship between independent and dependent variable. And finally, among 6 control variables, only economic growth is statistically significant, which explains that economic condition remains relevant in choosing the country to invest for innovation purposes. Finally, I would like to say thank you for participating in this conference and also thank you for hearing my thesis. Should there be any questions or inquiries, you can direct it through my email and also my LinkedIn. Thank you and have a good day.